look at the fixed income yesterday, the second trading day of the week. Serious demand for treasuries. And according to some data here, average yield contracted by 29 basis points to 12.52%. That's as far as the treasury is concerned. We're looking at an auction today by the central bank. We'll get more perspectives on that. We look at the same bullish sentiments at the fixed income, also at the Naira bond market. Average yield also down 32 basis points to 12.77%. Some reports says yields fell across all ends of the curve. Now we're seeing the falling fixed income yields. Let's track this with the Chief Executive Officer at Afrinvest Securities. Ayodeji Ebo is live to us in the studio over the next 30 minutes to have this two-part conversation in the fixed income and beyond the fixed income, all on Broad Street. Good morning. It's good to have you.
Good morning.
Thank you. This is a serious executive time here. The market seems, this is the time to be sitting on the desk this morning. But let's look at the fixed income. And we spoke about this. This is falling and falling yield curve. How much lower do you think we're going to fall?
Yeah, it's interesting that the dynamics...
I'm sorry, I'm going to cut it. It's a good news when fixed income yields is falling. Before folks out there may think perhaps what exactly it is. But we say the yield curve is falling. Well, what is it? Is it good or bad news?
Yeah, for the investor,
yes,
it's not really a good news for the investor because their return is also falling or reducing. So, but when you also look at the implication on a broader view, it's a lot of guys within the real sector have been clamoring for a drop in rates to enable banks focus on lending, because we've seen from a high of over 21% effective yield last year, which most banks abandoned, what should be their main business, which is lending, to investing in a risk-free investment. So CBN and also looking at the government have given a guidance that they will reduce what they will be borrowing, because we all know what led to that significant spike. It's as a result of aggressive borrowing to fund the budget gap. So we've seen that based on the reduction in the amount of borrowing, we've also seen that in most of the primary market auction results, seen that in most of the HOMO results, that when you look at the level of subscription relative to the level of offer that or allotment that the CBN does, we've seen that the aggressiveness even on the government part as well as the CBN part have also reduced. So as a result, we've seen significant drop. And when you look at the last 2 or 3 weeks, the HOMO auction, which is the open market operation auction that the CBN used to mop up liquidity, the frequency has reduced significantly. So as a result, people have to, investors have to go invest in the secondary market. And like what we saw last week after the HOMO auction on Thursday, liquidity improved, is being around 500 billion levels. When if you check it from the overnight rate and the OBB rate has been around 3%. As a result of that, investors went all out on Monday, buying across all maturities. And you know, as prices go up, you see yields coming down. And we saw that slowed down on yesterday. Today, because of the primary market auction that we expect, and from the maturity, the CBN is rolling over less than 50% of what is also maturing, showing that really they don't need as much money as they usually need before. So these are some of those factors that have come together to bring down the...
So this rebalancing, is it taking us towards a single-digit region? And again, who benefits from very fast falling yield on bills and bonds?
Yes, for the traders, for those that have purchased at high level of 16-17%, it's high time you saw them take profit on their portfolio. So they try to identify for instruments that are trading very low, maybe at the 13-12% levels. You take your profit on that and you try to identify like the HOMO that still goes for around the 13.5% levels. You still see people trying to take position in that. So you see some form of arbitraging. Once market is very volatile, it presents opportunities for the traders. that do like day trading or even on a weekly basis, they are able to make income. But for those long-term investors, we've seen most people trying to go long now with the anticipation that yields may drop further. But we also expect, looking at the dynamics of the fixed income market for this year, before it used to be like the domestic investors that play, especially the PFAs that play significantly within that space. But what we've seen this year is more of sell-off, selling instrument that's purchased at 16, 17% level, at like 13% levels, to also invest in OMO. That's part of what we've been seeing this year. The foreign investors have been contributing significantly to the activity we've seen in the fixed income market this year.
And why are they interested in the fixed income? We are thought they are piling more money into equities.
Yeah, the fixed income is like risk-free. The risk there is limited compared to equities, though the higher the risk, the higher the return. So on the equity side, they've been able to earn significant return this year. And the fixed income part, in your portfolio, you want to have like a balanced portfolio of fixed income equities. So for the fixed income, they've been playing significantly. When you compare the yields of Nigerian fixed income market, still comparing it to the developed market, it's still significantly higher. Though they also factor in some country risk premium, and which they still feel comfortable. And when you look at the FX market, in the last 1 year, it's going to be like a year when the FX, April 27, the FX I&E window was set up.
We should be having an anniversary.
Yes, I think we should, because
I think we should have an anniversary.
It's remained at that level.
Whether it is going to be a celebration or not, but we need to have an anniversary on the 27th of April. Thanks for reminding me. I'm going to put that back on my calendar. So the FX has worked for 365 days, technically speaking.
Yes.
And now the government is rebalancing, and we can now see this bumping at the lower end of the yield towards a single digit. So that brings us back to a bit more into the monetary policy space about what inflation level are we looking at by the central bank? How does that play into the clamor for a haircut in policy rate from 14%?
Yeah, though based on the last inflation rate at 13.3% levels, lower than the MPR at 14%, shows there's a positive real returns for investors. But we also know though we expect the inflation rate may still trend lower, though may not get to the single digit based on projection of the CBN. But if we see it decline faster than anticipated, it gives room for the Monetary Policy Committee at least to cut rates. However, they will still be mindful that the foreign investors still need to see that our yields are still attractive for them to come in, because we also need that stability. Nigeria is an import-dependent economy. We really play a lot. We require stability in our FX in terms of businesses. Businesses are able to project, and that is very critical. So in terms of being mindful of pressure on FX, the MPC would try to balance in between cutting rates for growth as well as trying to balance foreign portfolio investors. However, we've also seen that it may not necessarily translate into improved lending, even if MPR comes down by 100 basis points, 200 basis points. It is governments should come up with policies that would de-risk some of these sectors that the banks can lend. They need to take that first, try to encourage most of the private sectors that wants to invest in some of these risk sectors by coming up with policies that would encourage them in terms of improving more on infrastructure, in terms of policies that would help them ring-fence whatever fund that is being advanced to those particular sectors.
Okay, let's try and find out from the Eurobond global marketplace how both our sovereign and corporates are doing out there. Any idea, since we've seen this bit of a slowdown in equities since February, March, and now into mid of April, and this yield curve bumping at the bottom for Naira paper, is there a bit of a knock-on effect on the dollar Eurobond out there?
Though the Eurobond space, especially the sovereign Eurobond, has remained relatively quiet. At the beginning of the year, we've seen significant buying interest. And when you check in terms of price, return can be as high as 12-13% on some of the instruments. But we've seen, especially when you look at the first bank Eurobond, called that the corporate bond, you also look at GT has enjoyed a lot of investors' interest, which also tied to, especially for GT, in terms of their performance, their results, their full year results. That has also rubbed on it positively. So when you look at in terms of in the last 1 month, we've not really seen significant variation or changes in most of the yields within that space. It remained quiet, but we also expect that for the foreign investors with a yield or coupon of as high as 6-7%, still significantly higher than yields that you get within the developed markets, and that does not expose them to any foreign exchange rate risk. Though our FX markets have also been stable, which has given some form of comfort to the foreign investors, in addition to the improving external reserves that we've seen in the last 6 months.
So what is, the question is, what are investors, in particular foreign investors, what are they thinking about Nigeria right now? Do you think they're having a bit of a political risk sentiment, looking at everything that is going on in the country right now? Is this an issue? Are you hearing anything about their chief concerns as we get further into the year penultimate general elections, Q1 2019?
Yes, it's going to be, some of them have expressed some political concerns. We know as the electioneering begins towards the end of the year, some of them will reduce their exposure. And that's what we've seen within the equity space, because when they looked at it in terms of return to date, it's been very significant. Some of them have been taking profits and trying to also come and reinvest in fixed income market where they feel it's secured. Notwithstanding whichever way the election swings, they always know Nigeria has always been able to weather the storm, whether it's the incumbent that remains or it's a new government that comes. But we would expect that there will be some form of volatility as we approach the end of the year, within the fixed income and equities market.
But what is the Nigerian story really for foreign investors? Where is the sweet in the pudding for Nigeria? Is it the oil? Is it the political stability? Is it the transition? Is it the rise and fall? Or what?
I think it's the oil. It's also very critical. We've seen oil prices go as high as over $70 per barrel, and we know Nigeria derives a significant chunk of its revenue from oil. And you also look at the external reserves approaching almost $47 billion. That also gives them some comfort. When you look at it, this time last year was less than $30 billion. So that gives them some form of comfort that even if they want to exit, CBN can be able to fund their requirement and dollar FX requirement. But with the stability they've seen, when you look at the average volume of activity within the investors and exporters window, on a consistent basis, it's been an average of over $200 million, $300 million. So with little intervention by the CBN. So that has also created some comfort. And that is what takes us to when policies are right. Markets will always win. Though we may want to say that indirect pegging at 360 naira to $1, but we've also seen that the investors, the importer and exporter, are comfortable at that level, and that stability is very key to growth in Nigeria.
We're seeing almost $1 billion almost every week. And that looks like a decent money. Let's come back to Ayodeji Ebo, for the CEO at Afrinvest Securities after the break. You're watching Business Morning.